GreatestTradingTools.com presents an S&P reversal forecast for the date of March 31st, 2009. Signals reflect the following based on the S&P Mini Futures contract front month. Times are in Eastern Standard Time or New York time, and signals are always provided in advance, but other signals may not be available until a later time and therefore not shown here. CFTC disclaimer: if you risk it, you can lose it. All information here is for educational purposes only. All rights are reserved, and you can visit us at thegreatesttradingtools.com and learn how we determine our signals and also get a free report. Before we get into the reversals for the Tuesday the 31st of March, a quick review of the 30th. You can see where we had the gap opening here, and that's what the reversal stands for. You got an inverse there. We have a low here where the market reacted. Missing a reversal here. We did determine a reversal later in the day, early in the morning, for right here. So we got that low, and you can see it reacting off of that. The 10-minute reversals, you can see what we have. We got a nice series here, low here, high here, low here. Then the market consolidated for a little bit. We do have a low here, low here, low here, high, and the market reacting. But most of this was still, again, in a consolidation. Aside from the overnight gap, it did not provide a great deal of movement to work with. And this type of scenario is typically poor for reversals, or for any type of that trading for that matter. We did have an additional reversal show up here, where it was a high that after the market opened, we were able to determine this reversal, but that's not shown in our original prediction. Now for the 31st, what we're looking at, really again, the indication is consolidation. We have a number of reversals right here, one right after another, and typically that's consolidation. Now there is a type of scenario where this might be an exception. That's where the market may make a move, do a what's called a doji bar, which is a very short bar with similar open and close, and the following bar continues the direction. If we have that show up, I'll talk about that in a review. But what I'm expecting at this point is consolidation after the open. We do have a little bit of time in the open, the first hour, but most of it looks like it's going to be consolidation, and then we have it spaced apart. Again, difficult to say whether we're going to have anything because these hourly reversals are fairly close together, and we've got quite a few here. We'll have to see what type of action we get. On the 10-minute, we don't have as many matching. We have one in the beginning of the day, around from 9:40 to 9:50. So right after the open, you've got a little time to work with, and then you have this reversal. Then some time to the next reversal, which is at 11 o'clock, from 10:50 to 11 o'clock, and then you've got them spaced apart. And what it comes out to is that we have hour reversals from 10:30 to 11:30, 11:30 to 12:30, and from 12:30 to 13:30. So hourly reversals here likely to be just consolidation. We might get a doji set up, and I'll talk about that if that arrives. And then we have an hourly reversal from 14:30 to 15:30. During the 10-minute reversals, we have one 9:40 to 9:50, and then the next series are all within the hourly reversals. So you have to watch to see which one matches the direction of hour. If the hourly reversal is going to be high, then you're going to be paying attention to the 10-minute that's a high. If it's a low, then you're going to be paying attention and using the reversal that's a low. This one, 10:50 to 11 o'clock, is within one of the hourly reversals. These two are both within the hourly reversals, and they may match either one for the 11:30 to 12:30 to 12:30 to 13:30. And then we have an hourly reversal here where the 10-minute is at 14:20 to 14:30 or 15:20 to 15:30. So look for which one matches the hourly reversal of the 14:30 to 15:30. So look for that, and it should match it, and that will give you a much stronger signal. And that basically sums up the reversals. Just a point to make here: consolidations, they're tough thing to trade. This market, particularly as you look at it, it's doing a stair-step effect. Overnight, you get some movement like we did here, and then it consolidates. We jump overnight, but then it starts to consolidate. And so for a day trader, this is a little bit tougher to work with. You may want to look at it from overnight perspective and see if you can get something from that. But it's when it consolidates like this, oftentimes it's best to just trade it on a breakout and then use the reversals to get out and to manage to trade as it goes along. And that sums up the reversals, and hopefully it'll be some benefit to you. GreatestTradingTools.com presents an S&P reversal forecast for the date of March 31st, 2009. Signals reflect the following, based on the S&P Mini Futures contract front month. Times are in Eastern Standard Time or New York time, and signals are always provided in advance, but other signals may not be available until a later time and therefore not shown here. CFTC disclaimer: if you risk it, you can lose it. All information here is for educational purposes only. All rights are reserved, and you can visit us at thegreatesttradingtool.com and learn how we determine our signals and also get a free report.